Did you know that the Nifty Metal Index has risen 3% in the last week and 11% in the last 1 month? So what does this trend represent, and more importantly, what do global commodity prices have to do with this? Welcome back, dear investors. In this video, we are going to dig deep into this topic and understand the growing role of China's policies in this price surge. So while you might be hearing a lot of buzzwords around this topic on social media, we are going to drill down into the how and why of this in this video. Recently, we've seen a spectacular rally in the metal stocks. Stocks like Vedanta, NMDC, Hindustan Copper and Hindustan Zinc have risen more than 15% in the last 5 days. And I'm sure you must be watching all of this action in your news channels. But what role do global commodity and metal prices have to play in this? Firstly, there has been a lot of demand for metals in the world's largest economies like the US and China. As these countries come back from a period of stagnation to firmer footing, we are seeing a lot of demand coming from these geographies. As major consumers of commodities like aluminium, zinc and copper, we are seeing the price of these commodities surge. Secondly, we are seeing an upsurge in iron ore prices as we enter April and May. Seasonally, we've seen China to have a lot of economic activity go on in these months, leading to a rise in steel prices as well as a greater demand for iron ore. Thirdly, the anticipation of a rate cut by the US Fed as well as a weaker dollar is also playing a role. People are pricing in these activities to happen in the future and commodity prices are rising. Typically, you will see that commodity prices and the Fed rate tend to have an inverse relationship. So as the anticipation of the rate cuts becomes stronger, you would see commodity prices surge. And finally, the government focus on infrastructure activities has driven the demand for steel in India. The record production levels in India hint at an increase in steel prices. The World Steel Association has said that there will be a growth in demand of 8% in the Indian steel economy. Now let's bring India into the picture. As the global manufacturing hub as well as the commodity supplier, India is poised to grow fast with these rising commodity prices. The increased demand and higher prices of commodity could translate to higher growth in India as well as a lot more investment opportunities. If you look at the estimates, some of the best analysts in the segment, you would see that people expect Hindalco to grow 23.6% from here. The Jindal Steel company could grow 21% from here, and the growth in these numbers represents the broader economic trend driven by China's recovery. JSW Steel has an upside potential of 20%, and also Tata Steel and Nalco could both grow more than 15% in the next year. The results in this quarter for the metal segment are also going to be extremely interesting. The ferrous metal segment could be a little bit under pressure because of the higher coking cost, higher employee cost, even though the volumes have supported them. But on the other hand, non-ferrous metals like copper and zinc could see much better numbers, and that is what I think we are seeing with the growth of Hindustan Copper and Hindustan Zinc. Moreover, quarter-on-quarter volumes are expected to improve, and year-on-year growth could be broad-based between -6 to 6%, with non-ferrous metals growing stronger in comparison to the ferrous metals. In conclusion, as the global manufacturing sector rebounds and the US starts to follow more accommodative monetary policy, the base metal segment is poised for more growth. Now back home in India, in FY25, the Indian government expects higher growth rate for the Indian economy in comparison to the global market. And after the elections, people think that the global infrastructure spending is going to increase further. So wrapping up, there's a very strong positive sentiment around base metals, and they're definitely worth keeping an eye on and considering for potential investments. But while the opportunity in the metal segments looks really interesting right now, what we also have to be very aware about is that the metal segment tends to be highly volatile. If you remember 2022, when China changed the economic policies, we saw a sharp correction of 15% in the metal segment happen very suddenly. So before you invest into metal stocks, also be aware that this segment as a whole is more volatile than the broad market. But in the short term, definitely it can provide you great performance potential. So thanks a lot for joining us today. If you liked our analysis, please do write down in the comments and please let us know what you would like us to talk about next. If you like this video, please do hit the like button and subscribe to our channel. Until then, happy investing.